This is the Skin in the Game VC podcast, hosted by Tom Wallace, entrepreneur turned venture capitalist and the managing partner at Florida Funders, along with Saxon Baum, general partner and head of investor relations at Florida Funders. You'll learn from the best about investing in early stage tech companies, so you too can gain the confidence and find the tools that help you succeed as an angel investor. Are you ready to get some skin in the game?
Hey, Sax. Here we are, back at it. How's it going?
It's been great. It's been great. I missed you a few weeks ago when we had Clint on here, so it's good to see you again.
Yeah, no, I was traveling and sorry to miss that. So, a lot going on in the world. What do you got? What's exciting?
There's a lot going on in the world since we last talked. It feels like a whole different world, right? So, new administration, a lot of change. What's your thoughts?
Well, I'm apolitical, just a full disclosure.
As well as I.
I don't have a party. I don't have a dog in that fight. But I'm super excited about Elon and Doge and all the waste and corruption and cleaning up government and reducing the size of our deficit. And, I think it's super exciting. And,
yeah.
Obviously, a lot to be seen, but I think the fact that he's bringing in all these 20-something engineers to write algorithms to find all this stuff that nobody's ever looked at and what they're uncovering is crazy. I'm excited about it.
I am too. To play the flip side, you have a lot of people on the other side that are not thrilled with how these are going, talking about, this is a position of power that wasn't elected. These are decisions that really one individual or a group should not be making. It should be made by the House.
Well, they've had that chance to fix this for decades, and they just keep spending into oblivion. I think it's actually immoral what they're doing to the next generation of Americans, burdening them with all this debt. So again, I don't have a dog in the fight. I don't care if you're a Republican or a Democrat. You should be for reducing our deficit, for reducing government spending, for reducing the size of government, so that we're not leaving this legacy. In some points, something's going to happen. I mean, what is our debt? 38 trillion.
Yeah,
I don't know all the
crazy
numbers, but hey, if we rely on the bureaucrats and Congress to fix this, they obviously haven't done it.
It's going to be the same thing. It's insanity. I mean, and it's. I love what you just said there. Just throwing money. It's like throwing good money after bad. We in our business, we always talk about this. When you have a loser, you got to cut it, or you get in like Elon did with Twitter. You restructure, you roll some heads, you get everything going in the right way, and that's what he's doing here.
By the way, I just read this morning where he's looking to raise money for X, formerly Twitter, at a $44 billion valuation, which is what he paid for it. So not a lot of details. I think it's early.
That's interesting. I haven't seen that yet.
Yeah, so I don't know if he's going back to the same investors, Sequoia and Andreessen, the people that invested in X, like Kathy Wood, who we had last year at our summit. We should talk a little bit about our summit.
Yeah, no, absolutely. So we have our big summit next week in Tampa. This year, I'll preview a little bit. It's not an investor summit. It's actually a venture summit. So we renamed it this year because we have a whole morning session for our founders. So Tom, you and I believe this, and everybody around the table at Florida Funders believes, founders and investors. That's what we care about at Florida Funders. And so we've always tailored this day to investors and invited our founders. But now we got founder workshops and some great content from some great people running the morning sessions as well.
Yeah, I'm super excited about that. And, we're always looking for ways to add value for our founders. And we're such a fan of entrepreneurs and founders. And I think the new structure is great. Who's our keynote this year?
So we have David Cohen, who's the founder and CEO of Techstars. If you guys aren't familiar with Techstars, it's really, I would say, the second in line of the best accelerators in the world behind Y Combinator. Although
it's a lot bigger than Y Combinator.
It's a lot bigger, and they do different things. We're going to hear about this at the summit, but yes, they invest in companies. Yes, they run accelerator programs, but they're also in the community development business, which is something you've spent, the latter half of your career really, really building. And so I'm really excited to hear the conversation between you and David to draw some of those parallels that you've been working on in the state of Florida for 3-4 decades.
Yeah, excited as well. So that'll be fun. If two investors and founders, hope you can join us. We're going to be at the Motor Enclave. I've never been there. I'm excited about that.
The Motor Enclave, yeah. So Sam, who works on our investor relations team, his dad is actually the founder of the Motor Enclave. So he gave us a good deal. Brad, right? Good deal. And we're really excited about the Motor Enclave.
Tell people what the Motor Enclave is.
Yeah, the Motor Enclave, it's a very unique venue. Essentially what it is, it's a country club for car enthusiasts where there's a racetrack and then individual owners bought condos on the racetrack. They deck them out. They make them like their man cave type thing. But they built a state-of-the-art event center that has really become one of the premier event centers in Tampa. So it's really cool.
Yeah. And how many people were you expecting?
Probably have about 300 people this year, which is up substantially from last year. We were always capped around that 200 number, so we should be rated around 300 founders, investors. And then this year we actually invited a lot of our co-investors, so investors in the institutional world that we've done deals with before. So it's exciting.
The other thing I thought we'd talk a little bit about, by the way, I did, speaking of this morning and things you read in the morning, I read where Elon is proposing a $5,000 dividend to every American for the money he saves from Doge. So I personally didn't like to hear that. Let's reduce the deficit.
Yeah, let's not be making distributions. Let's work on profitability.
Yeah, let's not give it back, but I thought that was interesting. So what'd you make of the whole DeepSeek announcement?
You know, it was crazy. The market cap that got wiped that day was well over $1 trillion, and I think it was about $600 billion just from NVIDIA, which was crazy to see. When you peel back the onion, a lot of what was reported on was bullshit. So
I don't know. I'm sure I completely agree.
Well, I mean, they had NVIDIA chips. The model was trained on OpenAI. So to say that this is that much faster, that much cheaper, I think is a little bit of hyperbole, to use a word that you like to use. With that being said, the open source piece of DeepSeek is really interesting. And Llama's had open source for a while, but the model is nowhere compared to where DeepSeek is in terms of efficiency and productivity.
So I asked Perplexity, what are the advantages of, if you're not familiar, Perplexity, it's Bezos' back competitor to ChatGPT. I tend to use it more than ChatGPT. I go back and forth, and I also use Gemini. But I asked it what DeepSeek's advantage was, and it's a DeepSeek's combination of openness, affordability, and cutting-edge technology positions it as a disruptive force in AI development. So it's real-time processing. Its models excel in real-time applications such as optimizing traffic systems in major cities or detecting fraud in financial systems. So, I think there was some hyperbole, some BS, whatever, around the training, because it was really $6 million to train it.
Yeah.
That doesn't mean how much it costs to develop it, but they seem to think it was substantially less than was used for ChatGPT. I mean, they're fast followers, but they innovated. So not only with the open systems, but my understanding is that, I don't know all the technicalities behind this, but they didn't use NVIDIA's language to write it. They wrote it in some, they kind of used first principles thinking, like Elon came up with a different way.
Love that.
And they saved a lot of money there. It sounds like they did cheat on the data side, and used OpenAI's data, but OpenAI cheated themselves.
Yeah, I mean, look at
the New York Times.
New York Times,
Yeah.
exactly.
So they weren't all legit in how they got there. So I think it was a good wake-up call. Just that this is just my personal opinion. I was rooting for the little guys. I don't want the Mag 7 being the owners of AI, and I think cheap, ubiquitous AI is good for startups.
Yep.
And that, even though it's coming from the Chinese, which that's a whole political issue, and I don't think any of us are crazy about what comes out of China. But if it helps propel AI to being cheaper and therefore in the hands of founders and college kids and people that they can compete and come up with use cases and businesses and applications, to me, that's a good thing.
Yeah, I couldn't agree more. I mean, we're huge fans of innovation. Obviously, that's what we do every day. That's what we live, eat, breathe, and sleep. So having access to this powerful technology is very exciting. I agree. And I've already sort of heard and seen a lot of devs getting into the AI world that probably would never have access to beforehand because of the access to this model. So it's exciting. I mean, I would say
if it's just people that can afford to build data centers with huge H100 and Blackwell and all these NVIDIA chips, that's going to be very limiting.
Yeah.
But it looks to me like even in that case that Zuckerberg is still doubling down on his investment, announced shortly after that he's going to still spend billions on technology and data centers and NVIDIA and all that, NVIDIA chips and all that. They're going to make that available to developers. Yeah. So that's a good thing. So,
well, and I think the world is more open source now, right? I think that the technology world has adopted open source, and it's no longer a scary thing. And as investors, yes, we look for, is it proprietary, is it open source? But it's not hey, if this is built on some sort of open source code or open source technology, we're not going to invest. That's not the case at all.
Of course not. Yeah, definitely. The last thing I had in things that I just can't. I still see that it reminds me a little bit, going back 5 or 6 years, the whole blockchain thing with tokens that are coming out. But Trump and Melania both having their own token, and they're worth billions. I mean, oh my gosh, I thought we learned our lessons with some of these NFTs, and these tokens that are meaningless and don't have real companies behind them. But I guess maybe not. I don't know.
So my younger brother was in Palm Beach the weekend when Trump token came out, and he texted me. He goes, "We got to buy Trump token." I go, "You're drinking the Kool-Aid. You're at Mar-a-Lago. What do you expect?" Everybody in Palm Beach is going to tell you that.
Oh, Jesus.
And so I went contrarian to that. I went to buy the Millennia coin, and I ended up buying a fake one, and I lost about $1,000. So if anybody,
you got what you deserve.
If anybody wants to follow me in my crypto trading, it's probably not the smartest thing. But when it happens, Tom, when there's money out there afloat, and people are going to be investing in everything and anything. But I do think that that's probably a little bit of a good sign for us in terms of liquidity, the M&A market, and getting some movement going in terms of us selling some companies and seeing them go public.
Yeah, well, we're seeing some improvements in the M&A market, hopefully with the new administration, Lincoln Khan being running the FTC. We're going to see more of that. We just got one of our companies from Fund One just signed an LOI at a pretty nice valuation, so we're pretty excited about that. So yeah.
We have a great guest today, Jenny Friedman, a solo GP at 4 Acres Capital. Jenny, welcome to the Skin in the Game pod. How are you?
I'm great. How are you?
Doing well. We're happy to have you on here and excited to hear your story, excited to hear how you got to 4 Acres and a little bit about your investment thesis and what's going on. So, Tom, you want to kick us off with some questions?
Sure. Welcome, Jenny. This is Jenny and I's first opportunity to meet, so I'm excited for that.
We're like 10 minutes in, so
yeah. So I was checking you out on LinkedIn and looking at your bio, as I mentioned earlier, and a couple things stood out at me. First of all, how young you are and what you've accomplished for your age. Congratulations. Your success is very impressive.
Thank you.
But so why don't we start by tell the audience a little bit about your journey and your story and how you have your own fund now, right? That's my understanding.
Yeah.
And we'll get to that. But how did you get here and end up with your own fund and get into venture capital and all that?
Totally. So my deep background is born and raised in New York City. Went to high school at Horace Mann, and that's what I named my fund after. 4 Acres Capital is the field there.
That was one of my questions.
And I mean, I know this sounds really foreign to most people, but like I've backed a handful of people from my high school, and like they're some of my best investments, and I'm in constant touch with them. So that's where that came from. And then I went to undergrad at Penn, worked at Goldman right after and during college, worked in investment management. And then there was a point where I really was thinking, am I going to go to business school or can I transition into VC directly? And it felt like no one was going to hire me into VC from investment management. Like that just, and there were so many people giving me these tidbits of advice, like, don't wear what you wear to Goldman. Like, make sure you don't say I was like,
they're not wrong.
I was like, these tech people are so judgmental.
Don't wear your finance pro vest.
Yeah, exactly. And my Rothies. So from Goldman, I had headhunters calling me, but they were basically trying to place me in another asset management firm. And then there was one actual headhunter that I asked, I was like, what's the deal with can anyone help me with VC? And this guy was like, listen, I'm going to be straight with you. He had worked with my dad in the past. So he was like, I don't think anyone's going to tell you this, but no one's going to place you in a VC role. Like, that's not what we're paid to do. And I was like, sucks. So, I just started seeing like, how are people getting into this job? And it felt like I was reading articles, honestly, like I spent 4 months in a operating role, and that taught me more than all these years in my prior job about tech. So I basically applied to, I Googled like best startups in New York City, applied to all of these. I had back and forth with Justin at Hinge, like all of these different founders that were, I mean, some of them are out of business and some of them actually ended up being pretty successful. Came across MiniBar Delivery, which was a marketplace for alcohol delivery. Joined them and learned about, it's like a 4-person, 5-person team. So I was with them until business school. And then once I started at Columbia, I asked a girl that I went to undergrad with. She's actually right now at first round, but she had her own journey of going through YC, or I'm not sure she actually went through YC, but she worked there. She had a company called Way Up. I was like, do you mind introducing me to your LPs? Trying to get into VC. And
got to do anything you can.
You have to be
relentless. You still at the MiniBar gig at the same time?
No, I stopped that when I went to business school. I really wanted to, like,
what
I was like,
to MiniBar? I'm curious.
They got acquired.
I did?
And I can't remember by whom, but they did. And Drizzly it was like this huge.
Yeah, Drizzly's the one everybody knows, right?
But at the time, it was like MiniBar Drizzly. So I ended up asking her to introduce me to her LPs, and she was like, Nahal at ENIAC actually is an LP of mine. ENIAC, the fund, didn't invest, but like Nahal did an angel check. You should meet him. The 4 partners at the time, they're all Penn grads. They love the Penn contingency and whatnot. So I met with Nahal in the morning. I remember going to his office. I mean, it was like above a Pilates studio. Everyone was sweating. It was disgusting. It was like a residential studio. I mean, it was the start of life. They were just getting their feet on the ground in New York. And I think we had a pretty good interview, because later that afternoon, he was like, I've had hundreds of people for this role, but would love to have you work with us. And I was close. My brother's best friend was Adam Rothenberg of Box Group. I texted Adam. I was like, what do I do? Like, I haven't even interviewed out there. What's going on? And he was like, it seems like you have to make a decision in a vacuum, but like ENIAC is really, getting their mark in New York. And I think it would be a good idea. So that was really the start. I was with Nahal in 2015 throughout business school. Greatest little gig of my life. I mean, they are amazing. I love that team. And then they were hiring.
ENIAC is a VC fund.
They're a seed fund. Yeah, they're a seed fund. They do mostly seed, some pre-seed, but
how big are they? What's
they keep their funds they cap it at like 100, 150.
Okay.
And I want to say they're on their 6th.
All right. Nice.
Okay. They're just
sounds like a great way to learn venture capital. Great place.
I just followed Nahal around, and he was just the greatest mentor and one of the greatest guys I've ever met in my life. And so we did that. Was with him, and then they were hiring full time in the Bay, and that's where they had an office, and they were trying to be like just an SF fund at one point, and hoping that all the partners would move, and it was a whole process. Anyway, I didn't want to move. Just wasn't in the cards. I'm
not going to San Francisco.
You'll never leave New York. You're New York through and through.
I did not like SF, and no. So I was
a lot of other people that moved down to Florida. So it was good for us too. Jenny, it's interesting. Tom and I always get asked from younger people, how do you get into VC? And it's not an easy industry to get in, right? There's no traditional path to get into VC. But a lot of it's become an entrepreneur, go and work for a startup, figure it out, and then figure out how to get into VC. There's a lot of figure it out in the VC entrepreneurial world.
A lot of times it's founders that have had a successful exit and then that's the kind of their next thing. They're like, I want to be on the other end of the table. They don't look like they work as hard as us. I think we do, but that's another story.
No, I mean, I genuinely think that people, it's not linear at all. There are people that are like, they dabble, they're a venture partner, so they're sort of like part-time, like a glorified intern, see if they like it, get some carry on a deal they bring in. It's like, you can, and then you make of that experience as much as you put in, you're going to get out. So there's so many different ways to get in. But yeah, mine was, I'd put in my time.
Well, and I think too, the early stage venture, and really when you're with a fund pretty early, it is a startup. You're building your own business,
Sure.
And
Absolutely.
so there's a lot of people constantly ask me that, and that's what I always say. It's no, you're not working for, no offense to Goldman, you're not working for Goldman, you're not working for UBS. You're building your own, and that's how you get going in venture. It's a long time coming. It takes a while, but it's a part of the game. I mean, it's a journey.
Yeah, absolutely. But it's a fun place, right? Fun business.
Yeah, it's very like just in time hiring too. And that my biggest fear was graduating business school and not having a job, because I had everything lined up for my whole life. I was like, I applied to like 14 schools, like this, like junior year of high school. Like I was one of those annoying people, like needed everything to be out there. And then I did my summers at Goldman during college to make sure I had a job.
You were the exact opposite of Saxon and I.
Literally the exact opposite of Tom and I.
So type A about it. And then with the idea of graduating business school with 2 Ivy League, like, and just seeing what I was going to do next was like mental. But here I am living my best life.
So how long were you at ENIAC?
So throughout business school, it was about 2 years.
Okay.
And then I was at a networking event at Howard Morgan, who actually he's become a close friend and LP in my fund. I don't know if I can even say that. He was doing this event for sort of Jews in New York tech, and I met a bunch of people, and one of them was looking for a partner for her VC fund, and she had raised like a couple $1 million, really small fund, but she knew that I worked at ENIAC and she was looking for a partner, and so we ended up joining. She hired me to work with her on her first institutional fund. It was called Supernode Ventures. And we did, mostly pre-seed, seed, really small checks, generalists, similar to what I'm doing now, B2B software for the most part. And was with her for a handful of years. And then once I guess it was 2020, I can't remember, sometime in the pandemic, I incorporated 4 Acres because it was either I would raise another fund together or start my own. And I feel like I had to make the decision at that inflection point, and I just decided to go for it. And I'm super close with my partner there. She's also an LP in my fund, but I just felt like, I wanted to own the entity and be really hands-on in operations and investing. And that's when I started 4 Acres.
So let's talk a little bit about 4 Acres. I remember you and I were sitting in Miami at lunch at the Setai Hotel. And I believe it was right around that time that you started 4 Acres because you were thinking about it, but hadn't yet made the jump. Tell us about running your own fund. I mean, what's it like being a solo GP? Tom and I have 4 partners, and there's always chaos. There's always something, but we're always, group collectively making decisions.
Right.
What's it like being a solo GP?
It's funny because I talk to other GPs and just like not even everyone, associates, principals, GPs. Like I'm constantly, I feel like my text threads are just like VC after VC all day. I think the downside of it is that you don't, like, I have a venture partner and he's great, but he's also, not full time. I think the downside is that you don't have someone to collaborate with all the time, and your decision is sort of like the decision and final decision. And your
investment committee meetings are pretty small.
Yeah, they're on the smaller side for sure. And they're flexible.
You need a majority to go forward.
I love that I can like do a deal if I want to, and the autonomy and all of it. And then I can, it's really everything I put in, I get out, and I put in a lot of time and energy into this fund, but I can only rely on myself, like for fundraising, for everything. So
you do the fundraising, you do the due diligence, you do it all, right?
I do it all.
And,
I would
how many investments will you make in like a year?
So I would say, like, I feel like I always say we. I don't know who we is.
Sounds better. I like
well,
it.
you and the investment committee.
I agree with that.
Like 2 to 3 deals a quarter.
Oh, wow. So very active.
Yeah, you're right.
This quarter is the first quarter that I feel like it's over, even though it's not, and I haven't made an investment. But I feel like this happens.
What have you been doing?
I feel like I've been talking to more companies. We'll see. I mean, there's still a month and a half, but it feels
you got some time.
I get antsy around this time.
How big is your fund, Jenny?
It's about 10.
Okay.
Yeah.
Is it an evergreen fund or just no?
No, I have real LPs.
Okay. No, I didn't mean it that way.
No, I put in 20% of it, and I think that LPs liked the fact that I was putting my money where my mouth is, and
really, the game.
That's why we call it skin in the game.
Yeah, and then I had an anchor. I met an anchor investor actually during the pandemic in Miami, which was amazing. And then the rest, I would say the makeup is sort of family office, high net worths, and some other, and not that these aren't high net worths, but like some other GPs and people that I share deals with and doing similar stuff.
Do you typically lead? Are you
No.
leading? No,
I don't lead, and I think that there are pros and cons to leading too. Like it's more likely you'll get into some of the deals that are more competitive and you want to do, but then you have less power in the syndicate and how much you're getting and all of those things. So there's a trade-off with leading. Do you guys lead, don't you?
Yeah, we lead about 70% of the time. So you don't typically lead?
No, I don't.
Oh, interesting. Because you're so early. Sounds like you're really early. What's your average check size?
I say that we write up to 500, but I would say on average it's like 250.
Got it. And I know you said B2B SaaS. Refine that a little bit. What are you looking for?
So I feel like there's more things that I don't do. Like I don't do, hardware. I don't do really ed tech, ad tech, martech. Nothing really consumer. I mean, we have a couple consumer facing software, but it has to have sort of a B2B angle. We've been doing, I think, like almost half of the fund, shockingly, is something related to health tech.
Yeah, I was reading about your investment in Assort Health.
Yeah, that's actually a pretty exciting one. They
like it.
Ramped up really quickly.
We're big fans of digital health.
Sorry?
We're big fans of digital health. We think that, healthcare is, broken in the United States. And one of the best ways we have to fix it is technology and drive the costs down. And I was just at a conference and they were talking about that. And it was all healthcare people. And they're like, costs are going up on everything. So everything's.
Did you go to Vive?
No, it was just a small thing. And the point, these were healthcare folks, executives within the industry, founders within the industry. And they were like, costs are just going up and up and up. And I was like, well, aren't you looking at AI and technology to drive costs down? Like it's a given. It's just going to keep going crazy high.
Yeah.
Anyway.
No, there's a lot of exciting stuff going on in healthcare. Like I think some of the payers are slowly adopting some of these, LLMs, AI tools that they weren't even looking at before. It's a really long sales cycle, but in the case of Assort, I mean, their whole business model is sort of like partnering with clinics and then you having to call the front desk and it's actually AI speaking with you and managing your call schedules and whatnot, billing. But yeah, that's definitely one that I did that, I think, the summer of 23. So it hasn't been too long since the seed.
So where do you find most of your founders in your deal flow?
So it's funny because I do a lot of networking And at one point I was like, why am I going to hang out with VCs like all the time? I mean, don't I have friends? I mean, not. And I was like, then I looked at
that desperate.
like I screamed desperation. And then I looked at my portfolio and like I would say 90%, 95% are from other funds. That you have to stay. I really learned you have to stay top of mind.
Yep.
Because like I'll have other GPs being like, this company didn't go out to market, but we're going to put in, I think they're going to accept our term sheet and there's probably like 300 left. You want to take it? And that's like, if I weren't at all of these events making myself known that I'm out looking for deals, like I probably wouldn't get those looks.
And so, I mean, VC, as we know, if I've learned anything over the last decade working in VC, it really is a lot about who you know. And it's a lot about, I love how you said it, being top of mind, because deals are quick and you got to be top of mind for A, other investors that are maybe leading, but B, the entrepreneur as well. And so it's all about, being right place, right time. And really, Tom and I believe, I mean, you got to do right by your founders and investors, and you're going to get more and more great deals. I mean, a lot of our great deals come from our founders. Absolutely. And if we weren't the right people investing and we weren't good people to work with, it's like they're going to continue to bring us deals.
Definitely. I do think that when you lead, you do get more inbound from your founders, because I have some of my founders, I have incredible relationships and I text with all the time and we're constantly in touch. But if someone's going out to raise and they're looking for a lead, just because, most founders, when they're going out, they want to secure the lead and then they'll get follow-on capital. Some of them obviously will do both simultaneously, which is obviously preferable to me. But sometimes the founder, like our existing founders, will, connect new founders to leads first. So
when you're investing in a founder, what are you looking for? What's your litmus test? What makes you your investment committee when you vote? What makes you vote yes?
I really love it. So I would say I don't care if the founder I actually probably prefer founders that have failed starting something else, because it gives them sort of the chip on their shoulder to want to do it even more this time. Obviously, having a technical founder or a co-founder is, I don't think it's a non-starter if they're not technical, but it's almost non-starter. I would say the majority of my deals have a technical co-founder. I really do. I know that a lot of VCs are just 100% on the founder, but I really try my best. I mean, I always will diligence with the potential customer and really do the work on the market. I know that, companies pivot all the time. At the end of the day, it's about the founder, but I want to make sure that at least at the onset, they're addressing something that's.
Oh, we do that. We're very big on interviewing early customers and even prospects, because if they have the go-to-market part nailed, it just makes the decision a lot easier.
Yeah, totally.
But to play Moneyball, I think the data suggests that entrepreneurs that have failed do not make the best second-time entrepreneurs.
Is that true?
I think, if you look at unicorns specifically, I think you can check me on this. I think it's like 71% of all unicorns. The founder had a previous exit that was successful. It wasn't necessarily wildly successful, but it was successful. But anyway.
Yeah, I mean, I'm not saying like something went, incredibly wrong and, there was some, disaster at the last company, but enough so that the exit made them want to.
Yeah,
excel.
they want to.
Well, it's like an Aaron Chernin type story. It wasn't a failure by any means.
No, that was.
But we had a founder, and who now is a founder of ours, but he was a prior founder in a cybersecurity company. Sold it for I would say less than he wanted, and he felt like it
was an $80 million.
It was an $80 million deal.
Yeah, so,
but to use your language, he always says I had a chip on my shoulder, right? I wanted to go back out there and I want to build a unicorn, and he's well on his way right now.
And he wanted to own a lot invested this time.
Yeah, exactly. That was the other big takeaway. Yeah, of course.
Good for him.
I mean, like I invested in this company called Turnout Technologies. obsessed. I stalked Itai, he's the founder. I stalked him for like, I want to say 5 years, until he left his company and decided to start something new. I broke all my rules for him. He raised at the highest price I've ever, this would never fly with any other founder, but I wanted to back him so badly that
What did you see in him that made you want to back him so excited?
I mean, he's like, this is like he's a unicorn founder a couple times over. No, but he's seen it all. He's brought a handful of, like, he basically started this company with a bunch of people that have made up his teams before. He knows.
Yep, love to see that.
He's just so clear on what he wants to do. He's just a beast. Like, I can't wait to see where this company goes.
What's the name of the company?
It's called Turnout.
Turnout?
Yeah, it's basically like there are so many things that every day people have to deal with, like tax relief, tax filing, things with estate planning and bankruptcy, and just like anything related to the government that people just don't know how to deal with. They come to this site and it's just like all encompassing for anything related to government.
Tom, we need this product.
Well, after Elon's done, we won't.
Yeah, right.
I'm kidding.
Waste half my day on this shit.
Yeah, exactly. I mean, you don't know where to go and how to do everything, and they just they do it all.
Yep.
Well, it reminds me of a story. I was with my sister-in-law, Lee, your aunt, and I don't know if you know that Saxon's my nephew, but
no.
Yeah, he is.
Wow. No, I didn't.
Yeah, there you go. You learn something new every day.
So anyway, my sister-in-law is a saint married to my crazy brother, who's not, but anything but. But anyway, she works at this food pantry. She started this food pantry, and she was talking about how all these single moms who have children are really struggling to get help with daycare because it's hard for them. They got to get their kids off to school, and then they got to get them at the end of the day, and then, for them to hold regular jobs and to get help with daycare. And I said to her, I don't know this, but I suspect there's plenty of assistance out there. They probably just don't know what federal agency or how to apply for it. I don't know if Turnout covers that, but
I mean, they do everything.
Yeah.
Yeah. I wrote to check it out. I'm going to mention it to her as well.
Yeah, I know you're sitting in Miami today. Love to see that. But what's going on in New York? What's the tech scene like? We spend a little bit of time up there, usually a few trips a year. We've got some companies up there. We actually just invested. Our most recent investment is a New York-based company called Iris, IRIS. But what's going on in the Big Apple?
So I don't think New York ever went anywhere. Where is this? Is it iris.fun?
It's heyiris.ai.
Oh. I feel like
they have an AI solution for RFPs.
Yep.
Request for proposals.
Yeah.
Founder's very impressive.
Yeah, very impressive.
You might want to invest.
Wait, how do you guys find him? Through a founder or just like?
We found him through LPs of ours.
Yeah.
Nice. So what's New York like? I think New York is popping. I really do. I feel like there's so much activity. I'm almost concerned that I feel like we're in 21, 22 right now. I'm not like.
In terms of valuation, deal flow, peak of the market type feeling.
Yeah, I hope we're not. But I really feel like it's giving that sense of like term sheets are going pretty quickly. Valuations are really, really, really high. And you'll find on some of these deals, your average founder gets to $1 million ARR and like it's not cutting it for a Series A. Mm-hmm. And then you'll find that, someone with all the chops and the brand name VC behind them and all of it are getting to like 9-digit valuations with no revenue. And I don't know what to make of it right now. I'm trying to.
You feel like those the latter that you just mentioned, they're getting 9-figure valuations. Are they AI companies?
Yeah. Oh, I'm sorry. I'm talking about the AI companies.
Okay. And are the founders, like the guy you mentioned that they've already done a unicorn? Because we just did a deal at what, 50 million?
Yeah, at 50, and it's third time founder, unicorn founder, AI company.
I mean, that's a high valuation, but
aren't you guys finding that the AI companies are raising like crypto companies in 2021?
Yeah, I would say. I mean, I think if you look at the last 12 months, we were really high in terms of valuation, and we're starting to see some carnage, which is good. And we're starting to just be a little bit smarter about the way that we look at these deals, I would say, because the velocity of these deals is a little bit less. It seemed like for a year ago, it was every day we were seeing a similar type deal, maybe in the legal space, maybe in the RFP space. But now it's slowing down a little bit, but we're definitely seeing high valued companies still.
I feel like you put AI on it, and it reminds me of you put Web3 on it.
Yeah, it's the same type of thing.
Yeah.
So we'll see. But the New York scene is so active. Like I remember there were a handful of years when funds were like, we're just going to wait out this cycle and we're not going to participate in all the buzz. But I don't feel like anyone's saying that. Like it does feel like everyone on the fund side is being really active. And I'm really long New York, but I feel like it's a good time in New York VC right now.
Good. I mean, we're long East Coast, obviously, long Florida more than anything, and Southeast more than anything. But New York's been a great market for us, and we've got some great deals up there and great partners like you up there. And we try to get up there a few times a year, as I mentioned. But it's just a great city. There's just so much energy up there. Tom, do you want to do? I know we're coming up on time. You want to do lightning round?
Yeah, sure.
Oh, what's this?
Oh, this is the Tom Wallace specialty.
I don't know about that. I'm just going to ask you a couple of quick questions, and the idea is you answer them without giving them a lot of thought, and it's just like 4 or 5. So my first question I'd like to ask our guests is, so Bitcoin, we're sitting here right now, it eclipsed, got almost up to 110, I think, now back to 95 or whatever. At the end of this year, the end of 2025, if we're sitting here December 31st, what's the price of Bitcoin?
I'm the least crypto-y person ever. Like I could say
the lightning round.
You can't ask no. I mean,
I think that's the first refusal of a lightning round question we've ever had.
What is the Trump coin at? No, I'm kidding.
I mean, they are actually the market cap's like billions of dollars now.
Oh yeah.
Well, it was 15 billion. I think it's down to like 2. But anyway, okay. AI, is AI a job creator or a job destroyer?
Destroyer.
Oh, you were pretty certain on that.
Yeah. Across the board.
I really am. I mean, all it does is take away jobs.
Interesting.
All right.
Okay. So do you think a year out, the bromance between Elon and Trump is still going and Doge is being successful or not?
Yeah. That's a great question.
That was a good one, Tom. This is why it's a specialty.
They might. I want to say no, though. I really do want to say no. They're so volatile, both of them.
Yeah. Well,
but I said yes. You
said yes. Yeah, we locked it in.
Well, I hope you're right. I don't care if the bromance is going. I just care if they cut the government, and cut the waste, and cut the corruption, and.
I could see it not have. I could see it no. I don't know, Tom.
Yeah. All right. Last question. The M&A market's been pretty nascent for the last 24 months, whatever, 18 months, not very good. With Lena Khan leaving the FTC, the new administration in. What do you think the M&A market looks like? We've had many companies, Florida funders and most VCs, that have not exited, that probably would have exited by now, just because there's not a lot of hasn't been a lot of liquidity out there. Private equity firms haven't been that active in the M&A market. The IPO market's not been that robust. What do you see the M&A market being like in 2025?
I feel like the latter half of this year, like by Q4, I think we'll start to see it pick up. I feel like there's a lot of activity right now. I don't think that private equity is sitting on their hands anymore.
So I couldn't agree more. I heard the head of global alts at Blackstone speak 2 weeks ago. And first thing I did not know is Blackstone does not use leverage on their private equity deals. That was something that I just assumed they did, but they don't. But the second thing that was interesting, he said, we are motivated buyers right now, and we are out to buy. This started just this month in January, and we are ready to buy because we're seeing great opportunities with great companies. And so let's hope it happens.
I mean, 2024 with ending on Service Titan sort of, I think, gave people hope that we're going to pick activity up this year. So
yeah, we're seeing it. I mean, we're seeing it on our side.
Yeah, we're seeing increased activity. We're hopeful. I think my personal opinion is some of that might have to do with the interest rates. So if inflation does rear up again and the Fed doesn't cut interest rates, or God forbid they go the other way, then I think all bets are off. But I don't think that's going to happen. I think there's a low probability that could happen, although I guess it could. So, Jenny, you've been great. Thank you so much for being with us.
This was so fun.
Really appreciate it, Jenny. And to our audience, thanks as always for being here. If you like the show today, please go to our YouTube channel, throw us a like, subscribe. Tom and I are always here for our audience. And once again, Jenny, it means the world for you to do this for us today. So thank you so much.
Thanks, folks.
You.
Thanks for spending your time with Skin in the Game VC today. If you want to learn more about investing in early-stage tech like a venture capitalist, be sure to visit the Florida Funders website at floridafunders.com. Join our angel network at no cost and get access to Florida Funders VC-vetted investment opportunities in the next great breakout tech companies.